Hey everybody, thanks for tuning in. I know I waited a little later this week to put out a video. I wanted to wait for yesterday for the big Fed meeting of the, every 5 or 6 weeks. And so that came out. And as expected, a couple things came from it, things we already knew, and some stuff that was, I don't know, a little disappointing. Thing one here up at the top, the rate decision. What did they do? They did nothing. So the market was already predicting that the Feds would keep the Fed funds rate at the same place. So it's locked. It's locked in this range, 3.5 to 3.75%. Pretty much everybody on the Fed board voted to hold the rate except for one little person there. No big deal. The one thing, though, that was interesting is we don't really care about what the current rate is or the decision because statistically everybody knows what it is before it happens. What we're curious about is the new projections. And so the new projection coming out of the Feds is now possibly one more rate cut this calendar year. So that has diminished a little bit. The rate cuts previous to this meeting were at 2. Now, there's some funny things, though, with that we have to be aware of, right? I mean, Fed President Powell was speaking. Phone's ringing. I got to hang up on Owen. It's Owen Hill calling. He's probably working real hard, so. But to that point, the Powell is done, right? In May, he goes away, and we will have a new Federal Reserve president, possibly Kevin Warsh. He's going through the congressional hearings at the moment about that right now. We're not sure how that's going to go. The assumption is he will get in. The also deeper assumption is ironic because the history of Kevin Warsh is a little more contrarian to the beliefs of the president. And my personal opinion is I imagine those two individuals have had a lot of very quiet, private, secret meetings and see very eye to eye on whatever the trajectory of money printing, interest rates, all of that fun stuff is, certainly starting in the second half of this year and moving forward. Some of the things that Powell talked about that were very relevant. Obviously, inflation is staying sticky. It's hovering right above 2% for the most part. It's come down pretty dramatically in the last 4 years. One of the things, though, that was interesting that was not helpful to the conversation was a couple days ago we got another version of inflation. So a lot of people like to focus on CPI, the Consumer Price Index. We got PPI, the Producer Price Index. This is what producers and wholesalers pay for things. And it came in hot. They were expecting 0.3 increase for the month, and I think it was at 0.5. And so that came in hot, so that's a little frustrating, a little challenging. It just kind of makes the case for where is inflation going. And the problem, though, is the current event, right? We got this big war going on in the Middle East. U.S. oil has been hanging out around $100. That hasn't really priced into that inflation data. And the question is, will that be a temporary inflation price shock because the geopolitical stuff calms down, or is this now a looming, ongoing, dramatic thing? Hence why Powell said this is highly uncertain at the moment. So we don't know. Last week I made a video. The video was stock market up, oil down, and vice versa. It's a little teeter-totter. One of the things I touched on in there was the jobs report. So last month's jobs report was pretty cataclysmic. I think we lost 92,000 jobs in February when they were expecting a positive 50,000 jobs created. So we do have a softening job market. Growth is a little weaker in that respect. But everything's kind of fighting each other from a data standpoint. I don't want to sound just all dour and negative. As I've talked about in the last couple months, we're having incredible earnings. Net revenues from companies from the last earnings we just went through were just over 9%, which is the strongest we've seen in a handful of years. So that's a very positive things for the stability of the market and these companies spending money. The other thing that I touched on with Owen a couple weeks ago is I showed a chart where historically when geopolitical stuff and wars break out, generally the US markets do well because this creates more manufacturing, we're producing stuff, we're making stuff, companies do well, and we see the stock market actually ultimately go up. And ironically, since the war broke out a number of weeks ago, the outperformers are the Mag 7, are some of the growth stocks, is Bitcoin. It's not the gold, it's not the defensive, it's not the safe things that we would traditionally think emotionally. Rate cuts, as Powell touched on, are not guaranteed. So he's just going to wait and see. But once again, wait and see for what? The dude's gone in 2 months. So that's Powell. That's the Fed meeting yesterday. Certainly the market didn't like it. The problem is we have the meeting, right? They give the rate announcement around 11 a.m. and then Powell starts talking a couple hours later. And the Dow was probably down, I don't know, maybe 450 points. And as he's talking, it's just going down more and more and more. And the Dow finishes being down almost 800 points yesterday through his conversation. So what's the drama? Obviously, one of the things that's driving some of the chaos are these oil prices right here. You know, U.S. oil is trading at $97. International oil on the water, Brent crude, is trading at about 110 at the moment. Obviously, these are dramatically elevated from where they were, a month or two ago. This is, creating that upside pressure on inflation and a number of those things. So something we're obviously watching. Once again, flip a coin at the moment. Is this something where there's been enough supply disruption that this continues to be a mess? Or is this something that gets quelled pretty quickly? They get the Strait under control, all the drama dies down, the bad guys or whoever run out of rockets. But what's happening in the markets? I mean, this is what's really relevant to us, is how are things doing? So, at the moment, we had a peak here in the beginning of the year in January where the S&P 500 hit 7,000. Woohoo, right? They were popping champagne bottles and putting on S&P 7,000 hats. On CNBC, the Dow Jones also hit 50,000. And at the moment here, it's pulled back. Right now, the market's down at about 6,600. Well, I mean, peak to trough here at the moment, that's only like a 5.5% decline. So even though that stinks, it's really not that big of a deal at the moment. In fact, what we're seeing here is, if I draw kind of a line, there's just this long kind of 6-month consolidation period in the market. But to be fair, we just came off of a time period in the market where it came up like a missile. And so honestly, I like the breathing room. I've made a strong case in these videos of why I think the stock market's going to be much higher later this year. We're working through some digestion of drama at the moment. But honestly, consolidation periods in markets are fantastic. It helps stabilize charts, stabilizes all the algorithms and all the moving averages. You can't just have a chart running up forever. Now, last year, it's kind of funny the timing, right? Because this market started rolling over in February, and that's kind of what happened last year, right? This moment right here back in February last year is when the tariff stuff came out, Liberation Day came out. Peak to trough right there, though, you had the market go down 21%. So this moment in time with World War III and chaos and headlines and overwhelmingness, honestly, the market has hardly done anything. I mean, it's very fascinating that it's held up this well. And once again, a lot of it goes to those underlying things that we're being conscious of. Earnings are still stable, deregulation is still in play, the Fed change, and even the expectation of some rate cuts are positive. Tax returns are coming out, and people are getting a little higher tax returns than expected. Even though that's, in my opinion, very minor, whimsical, silly, it's still a piece of the puzzle. It still creates a little tiny microeconomic boom. Even if gas prices are up, people now have a few extra bucks to help pay for things as we work through the next few months here. Another, borderline anecdotal thing that we like to look at is the Fear Greed Index on the CNN website. Really what they do is, even though they make this fun little index thing that you can look at here, you see it, I'll write on it. You see that it's, come on, right on it. You see right here, it's pointing to extreme fear. The market is full of extreme fear, and it's at a 16. Now, it goes back to the Warren Buffett adage and all those things. When the market's fearful, that's a great time to buy. When the market's pointing over here and everybody's being greedy, that's a good time to think about what the heck you're doing. But all this little adorable pinwheel thing is doing is it's coming down here, and they've taken all of these different moving averages and algorithms that we look at when we're analyzing market trends. Here's a momentum trend, here's a stock price strength trend, here's the breadth trend, puts and call options. You see all of these charts, they all have this little tag on them at the moment for the most part that says, hey, we're pointing towards extreme fear, neutral. Basically, all of the sub things, all of the algorithms that hedge funds use, everybody, the market feels a lot of anxiety. Now, that's interesting because right now the market is as shorted by hedge funds as it was during Liberation Day last April, the bottom of the market. The VIX spiked last week, which is a big bellwether of just the volatility and risk of the market. And if I go to the timeline version of this pinwheel, let me move my pretty face over here. Let me get a little pencil out. So we're right here. We just hit that 16. But right here, this was a 7, so that was last November. But last April, that low spot we hit right here, that was when it was at a 4. So this thing has come down pretty dramatically, almost as much so as when it happened during Liberation Day, yet the market itself is still holding up. That's once again, I think because the big stocks are doing pretty well, earnings are coming in. Even yesterday, Micron earnings come out. They have incredible, like their sales growth on their memory storage is up 300%. Things are moving around. So in any case, a lot of moving parts, a lot of chaos, a lot of busyness in the market. We're buried here staring at all of this stuff. I have a lot of optimism that things will ultimately stabilize, and we're going to look backwards on this just like Liberation Day and say, hey, what a nice little attractive buying opportunity that we were all handed. So in any case, just wanted to give everybody a quick update on what we're looking at, what we're thinking about. If you have any questions, thoughts, concerns, please don't hesitate to reach out. That's why we're here. I'm here, Tana here, Owen here. Everybody here is focused on being able to help you understand your money, your finances, your retirement income plan, and also help give you some peace of mind to help give some context to the thoughts and the things that are concerning you. So please reach out. You can certainly visit our main website, thelindgroup.com. Otherwise, everybody, have a great day.